As can be seen in the pattern, after the evening star signal in the Dow that eventually closed below the T-line, bouncing off the 200 and failing again, we're in basically a bearish J-hook pattern. So even though today's positive trading occurred, creating a bullish Harami, we still need to see bullish confirmation tomorrow to tell us the bulls have stopped the selling and the uptrend may be starting. Obviously, the first target would be back up to test the T-line. However, in after hours, Amazon is trading down significantly, and there was a couple other stocks, major stocks, that missed. That means if things open lower tomorrow, wave 1, wave 2, wave 3 being the same magnitude as wave 1 is probably going to still head down further before we see any bullish sentiment come into the markets. That same scenario can be applied to the analysis of the NASDAQ. Because of the Amazon and a couple other big stocks trading lower, that means we're probably not heading in this direction. We're still heading in this direction until wave 1 and wave 3 are the same magnitude. Although Amazon traded positive today, note that it did not do a reversal signal. When it opened positive and closed here, that is not a candlestick reversal signal. That's just an up day and a downtrend. I think at this point, Amazon is trading back down at this level after hours, which is also pulling the Qs down, which means the NASDAQ should be opening lower tomorrow. NVIDIA traded positive, but note where it didn't close. It needed to close just above the halfway point of this candle to create a piercing signal. It didn't. It is currently trading back down here, which means there's still more force to the downside in some of these big stocks. AMD is a good example of a bearish J-hook pattern failure right here at the 50-day moving average, making a blue ice failure that more than likely is going to take you back down to the 200. As you saw, as soon as it was trading back below the T-line, the prospects for heading lower is much more greatly probable. Currently, after hours, it's trading back lower from where it opened up after the gap down. So I'd still suspect that your target is at the 200-day moving average. Recognizing very observable candlestick patterns allows an investor to have a much higher probability of being in the right trade at the right time and projecting where the target for the next move will be. The sell signal on Roku was very obvious when it came down, bounced back up to the 50. This is called the blue ice failure. It failed this support level. My late friend Dave Elliott described it as somebody falling through the ice. What do they try to do? They come up and try to find the hole they fell through. When they can't find it, they drown, which is a candlestick sell signal. If they drown, where are they heading? To the bottom of the pond. This also correlates that if this is wave 1, this is wave 3, more than likely taking you down to that level. Candlestick analysis is merely the graphic depiction of what happens in human nature time after time. That'll be it. We'll see you in the chat rooms.